Hi, everybody. We have, if anybody new came on, we have Steve LeRae, who is phenomenal insurance broker, insurance agent who does multifamily, single families, all kinds of different insurances, throughout the country. He's going to speak a little bit about insurance with, and the ins and outs of insurance with single family homes. And, you want to talk about the.
Yeah, I mean, this is just sponsored by Virtual REI Academy. So go ahead to our website and check that out. We have a lot of courses on there and different things. We're not going to take up too much time with that because we want to get right to Steve with lots of insurance questions and problems. And we're interested because we're here in Florida and that is the hot topic down here. So,
Yes, we've had.
Steve, thanks. We appreciate you being here, and go ahead and take it away with your 32 years of experience.
It's all fun. So single family is going to be a little bit different from multifamily, a little bit, but it's not all that different. Why? Because, a lot of the customers who call me, when they understand it, when they get it, they don't buy one rental property, because if you really get it, you know what you're doing, you buy a second, maybe you buy a third. And you start to get it. I have clients that, you'd sit next to, and I always get a kick out of this. Jane, you'll love this story. So I'll explain it by the property manager. I had a customer call me that owned an apartment building, no less. Okay. And he had the first guy come and he was looking to hire a property manager. And the first guy was all glitzed up and he was really polished. He had a nice car and he had brochures, and I'm going to tell you what I'm going to do to be your property manager. And the second guy pulls up in his beat up Ford Bronco, okay, and all that. He's got dirty hands and he's got this, that, and the other thing. And he calls me and says, because both of them were my clients, and he asked me which one I should hire. And I said, the one with the dirty hands. And he thought I was nuts, but the other one was professional. He was great. And I'm like, you asked me, a property manager has dirty hands. He's out in the properties, checking the properties every day. He doesn't have clean hands. Okay. And by the way, that guy owns the apartment building down from you and has a waiting list. He can fill yours with good tenants quickly. It'll be, he's who I would tell you to use. Well, they hired the glitzy guy. Okay. The glitzy guy came, and what did he do? He put anybody who came in that had, a down payment for rent, and within 6 to 8 months ran the building into the ground, put the worst kind of tenants in, these good tenants moved out, and it just became a mess. Okay. Because a property manager has dirty hands. So I say that, when I have, landlords come in, and sometimes similar, and, we have guys that are glitzy, trying to play what I call the mortgage game. And I'll get to that in a minute. But we have guys that come in dirty shirts and dirty. Why? Because they're buying properties. They're out there, and you don't look at them that they own 30 properties and are worth millions of dollars. And you never know if you were sitting next to them. But they understood how to buy a property, and they got in, they cleaned it up, they did a nice job, and then they bought the next one on the block, and they specialized in certain areas. And then people started calling them and saying, "Hey, Jim, James, I saw you've been buying properties in the area. I'd like to sell mine. Would you be interested in buying them? Oh, by the way, I own 2." I mean, so every year my guy calls me and he adds 1, 2, 3, 4 more properties of people calling him, wanting to, and now he runs, he's got a bunch of properties in that area. It's always a fun story. Getting into single families, so a lot of the calls I'm getting now, we can all laugh about this. Hi, Steve. I'm buying on 400 block of North Asquith Street. It's going to be my personal residence. Can you give, I need homeowners insurance. Translation. They're trying to get a homeowner mortgage because it's cheaper than getting maybe hard money or an investor property mortgage, and, we can snip those out, but, I always get a kick out of the guy who calls. I mean, sir, this is your third property with us, and you're trying to tell me you're living in all three and you're spending one night in each of these properties. Come on. I mean, they're landlords. Oh no, Steve. I'm living in one day in each one, really? So if they're trying to get cheaper mortgages, 30-year mortgages, and keep trying to insinuate they live in this property, and this property, and this property. And then you wind up getting stuff that's not insured property. Look, you're really renting it out, aren't you? I really need to write you a dwelling fire policy as a landlord, okay, to make sure we do it properly. If something happens, I'd like to know that the property's covered correctly. So, like we had one today, we insured, we did it last year. All of a sudden she's refinancing and they sent it over and it's an LLC name. Okay, well, when are we going to tell us you conveyed it to an LLC? Now I got to rewrite it because it actually has a different named insured. We certainly recommend you not buy properties in your own name, especially in Baltimore City. You buy them in an LLC. But that's what we recommend. So, typically, a lot of my investors don't have just one, they have multiples. Single family is some people like to specialize in certain areas. So we talked about before, I said some people like to buy the mobile homes. I've got, the problem we're running into there is getting these mobile homes insured, especially older ones. It's become a real issue. The carriers just don't, we're having a really hard time getting these insured. But one guy, built a whole nice business doing mobile homes. And I get it. It makes sense. We have another guy that specializes in condominiums. And he's been buying, lately when he could really get them, really buying condominiums and getting them rented out, cleaned up, and then, really nice rentals. But again, you could get hit with an assessment there and wipe out your whole year. But, he likes to do condominiums. Then we get what I call, the single families. And to me, a single family, when I talked about it, and we talked about it earlier, is really anything that's a 1, 2, 3, or 4 unit property. Okay, because I can get any of those, what's called a dwelling policy, a dwelling insurance policy. Okay, and whether it's Safeco, whether it's Travelers, whether it's Foremost, and other carriers that I have that will insure a property on a dwelling fire package like that. So again, 1 to 4 units, and it could be in, I get these calls all the time. My agent told me, we can't, he can't insure an LLC. You can't do that. I'm like, sir, we do that all day long. He just doesn't have the right carriers. He was looking to insure that as a dwelling on a standard homeowner's insurance policy, and you can usually do up to 4. But they didn't know how to write it as a landlord package. So, but I get those calls. There's agents out there that just don't know how to write that stuff. We talked about some of the coverages again earlier. I said we need to be aware of when somebody's renting to a service that they're renting it out as a sober living home or some sort of subsidized housing, and all of a sudden they're renting out the rooms, and now all of a sudden your 4-bedroom is really an 8 unit property because they're renting to 8 different people. So we need to know about that a little bit ahead of time. Something else I'm seeing lately, people are renting to sober living houses. Just blanked out. If I lost my train of thought, but anyway, people are renting all different kinds of stuff, and it depends on your tenants. I need to know who your tenant is, what the tenant is, what are you doing with the property? Again, is it Section 8? The conversation we had a little bit an hour ago. Somebody calls me, Steve, I'm only spending, I saw something on a post the other day. I'm only spending $400 of property on my insurance. Anything more than that, you're getting cheated. I'm like, let's see your insurance policy. They never want to show you what they're paying for. Okay, or it's been stripped down. It's they don't have liability. I got this before. I'm an LLC. I don't need liability insurance. Sure you do. You're going to be sued. Why don't you look up what we call the Dachman decision here in Baltimore? We can pierce your corporate veil and sue you personally. No, oh yes, you can. Go read the Dachman decision. Which, what we deal with here. You need to have liability. Okay, we need to have, it's a question of something called personal injury liability, libel, slander, defamation of character, invasion of the rights of privacy. One of the things we're getting now, this has happened to a few of my clients. It's all national news lately, so this is a fun one I think we should discuss, and that's squatters. So your property has, here's the phone call I got about a year ago. Customer called me all crazy. The house was going to settlement later that afternoon. The buyer went by and drove by and called him and said, Jim, why didn't you put curtains up? We told you we didn't want curtains up. We wanted it, same way, we want to put our curtains up. He says, I didn't put up curtains. Let me go run down and see what's going on there. So he runs down, the door's open. He opens up the door and the people are sitting there having a meal, and they said, can we help you? He said, who are you? Oh, we're the tenants. We just rented this place. He said, no, you didn't. I'm the owner and I didn't rent it to you. And we rented it from John. What do you mean, John? Oh, we met John here. We found him on Craigslist. He showed up. He had a lease in hand. We paid him first month's rent, or maybe first and second month's rent. And, he gave us the keys. Why? Because he popped off your locks and put on new locks. By the way, this happens in Baltimore. I saw the comment. It's not just a Florida thing. This has happened to several of my clients. They pop off your keys. They put your stuff. They're looking for houses that are vacant, that are about to sell, that are done. The police show up, and what are the police in Baltimore? They're going to say, okay, well, this is, they've got a lease. This is civil. We can't help you. Go to rent court. Have a nice day. So we're having discussions with clients, especially if you're getting ready to sell something, if you rehabbed it, you really need to be thinking about putting in a central station monitor and alarm system and spending it for those few months while it's there so nobody breaks in at the last second. And you need to be calling the police immediately when somebody's breaking in. You've got to have a central station alarm that calls you immediately with cameras. But that's what's going on. That's the nature of what's happening out there at the moment. So we've had that happen. So we took the builder's risk policy. We rewrote that to a landlord package while it took him 2 to 3 months to get these people out. And, sometimes they're professionals and they just go to the next house. They pop off the lock. They show the lease. John's gone. That burner phone, that's a lot, that's gone. But they have a receipt, a handwritten receipt for money they've, that they said they took, paid cash as a deposit. So it's happening here as well. Now, we don't have the law that New York has. I don't know whether that's good or bad, that if 30 days, you're considered to have abandoned the property. I think that's a New York law. Maybe even California. Not 100% sure, but one of them, it's like 30 days. So you found people that in apartment buildings are getting away with some of this in New York, and attorneys have now gotten wind of it and they're defending the people, and they're making it a whole thing. It's a mess. So that's something we've talked about. If you listen to the last segment, dog bites, you must have your renters get renters insurance, make you the additional insurance for dog bites. We discussed lead paint. It's more prevalent in the single family houses, especially, than it is necessarily the multifamilies. But yeah, hey, if you're going to buy something, strongly look at buying lead free over lead safe. You'll sleep better at night. Single family houses, like I said, there's some cool things going on now, especially in the county. We've got carriers that'll do what's called blanket policies. We can put a whole lot of properties on one policy. Or sometimes it's just better to do them individually. I've got somebody who sent me 5 recently, and I'm looking at it both ways for them. Hey, what's the best way to insure it? There's no right or wrong way. But keep in mind, when you have a blanket, you have 10 properties on a policy, the rates can be really good. But also, if you get a claim, one claim, a house burns down, is $200,000. hey, you were only spending, say, $10,000-$15,000 on that insurance. Now they want to come and cancel it. Why? Because they paid out 200, you're only paying in 10 to 15. Now we got to go find insurance for all, say 10 new properties. Where if they were individual insurance policies and it was one property, now I just got to go find insurance for one property. That makes sense. They can't touch the other 9. So again, different ways of looking at it. There's no right or wrong answer, what works for the customer and what's best. Probably should have covered this in the last section. Slip and fall. We don't talk about this enough. Somebody slipped and fell. What's in your lease? Who's responsible to clean up after the snow? Who's responsible to clean the sidewalk? Who's responsible to clean the driveway, etc. If somebody trips and falls. So something I want you to be aware of how you're addressing it in the lease. An interesting one that's coming up now, the new hot thing with insurance, especially in New York. I can speak for my kids. New York's all about you go to rent an apartment and they want something like to see that you're making 80 times the rent or something like that. So if the rent's $2,000, if it's you or you're sharing it with another person, you and the other person need to have $160,000 a year of income to qualify for the property. And I know what you're saying. That's nuts, but that's what it is. So if you don't have that kind of income, then you need somebody to co-sign like a parent. And then it goes up to 120 times. Okay. And they don't care about whether it's S Corp or corporate income. They only look at W-2 income. That's all they look at. So if you're the parent, you're trying to help guarantee the kids' rent, and all your income comes in the form of S Corp income or money from rental properties, they're going to look at you like you're a pauper. And you're like, excuse me, I made $1 million last year. It's on my tax return. Oh, that's not W-2 income. That's not guaranteed. They look at the W-2 as guaranteed, but your rental properties, as far as they're concerned, are worthless, and they won't include them. And you're like, I made $1 million. I have $1 million in the bank, sir. No, that doesn't count. You're not making enough money. And they don't care. I mean, this is nuts. So you actually have to go buy an insurance policy, a special kind of bond to guarantee the rent. Okay, this is the new hot thing they're doing. They were doing this in San Francisco. I understand it's becoming a thing in Miami now. It's all over the rage in New York that they want guaranteed that if you don't pay, that we can then go after this bond to collect the difference in the 120 times. So, hey, you made 70,000. Your significant other or your roommate makes 70,000. You got a $20,000 shortfall. Okay, so we're going to go buy a bond for $20,000 for the guarantee that rent. That's actually a thing becoming more popular as you have large corporations buying all these apartment buildings and jacking these rents up like crazy, and people can't afford these rents. So that's something that's out there. You're going to hear more about that. Conversations we're having with people. Why don't you go out and buy your first property? Or your first home. I'm nervous. I'm too nervous about it. Well, your rent's up. My friend's wife passed away. They have a 2-bedroom. You're paying $3,000 a month. You're paying $36,000 a year. We can go get you a great condominium, a 2-bedroom, and you could be paying $1,800 a month for a great place and have equity. I don't know. And he re-upped his lease. What are you doing? You're wasting money as far as I'm concerned. But okay, be that as it may. Single family properties, as I'm saying, carriers are going up, carriers are going down. As we discussed earlier, how are they getting those rate increases? They're following for the rate increase, and then they be jacking up the replacement cost of your property. And I'm seeing stuff come in, the replacement cost they're using. They're counting your basement as a floor. all kinds of things. I'm like, the house is 1,200 square feet. It's not $600,000 replacement cost. Oh, it's not 3 stories. That's why it's only 2 stories and a basement. And it's an unfinished basement, so we have to fight the replacement costs. We actually read these and argue with them to get them down. Because some of the replacement cost calculators that they're using now are just, it doesn't even make sense, is what we're seeing. What else can we talk about? Again, brick versus frame. Brick's always going to be cheaper for insurance. Age factors into it. If you're buying these older houses, understand every carrier I represent is going to send somebody out to take at least a front and back photo to see what it looks like. If you're missing siding, you're going to be written up. If you've got abandoned cars sitting there, you're going to be written up. If you've got your roof, if it's got missing shingles on it, you're going to be written up. And you're going to need to hire a repairman to come and fix it. We've talked about the prior segment. Everybody's up on these fire extinguishers today. You need at least 1 per unit in a central place. They prefer them be mounted, but if they're not mounted, if they're still, but you've got to have a fire extinguisher. You've got to have the carbon monoxide detector. Required these days. What else are we going to look at? Every house you call me about, I'm going to ask you how new the roof is. I'm going to ask you how the plumbing, the roof, the HVAC, and the electric. Has the electric been updated? Hey, take a picture of the box for me. Let's see what you got. Because the insurance companies are going to ask. They want to know. We talked about the roofs in the prior section. They're going to Google down on it with Google Earth, or they're going to send a drone up to look at your roof. There's no hiding your roofs anymore. If you're not maintaining your roofs, they're not going to be a roof replacement company for you. You're going to find yourself canceled. You've got to maintain your properties. Okay. If you're not I get it. If you're buying something that needs work, fine, get it done we'll try to give you some time to get it done. But if you're buying stuff that's just really beaten down and you're not maintaining them, nobody's jumping up and down to insure you. They're just not going to buy a claim. So that's something, we're going to look at, they're going to look at, kind of thing. It's real important. LLCs are not a problem. Nicole would ask for, hey, if you're buying something right now, it's not rented out, and you need a builder's risk. Okay, fine. I can write you a 2 to 3 month a 3-month policy if you need it. Get in, get your work done. And when it's ready to be rented, we'll rewrite it into a landlord package. No problem. We do it all day long. Do it in our sleep. I'll come in the morning and I'll have 2 emails begging me, hey, we're settling today. We forgot to get insurance. We need it right now. Help. So done a lot of talking. Please, I want to answer any questions that anybody has, any comments. There's no, please, if you're too afraid to ask your insurance agent, better ask me. I know almost every street in Baltimore. I insure back alleys, alley houses. There's no place I don't know that I haven't seen. There's just, anytime we've seen it, I've had customers, something interesting when they're doing a whole block. Nicole, you'll love this, where they did manufactured homes. They cleaned the whole block out. They ripped down all the homes, and what they had done is they bought manufactured homes and they brought them in from Pennsylvania. They trucked them in, and they assembled them with cranes. And before you knew it, you had these beautiful townhouses that were manufactured homes. So instead of putting them up and the cost of construction, it was very quick. They actually put them up for sale and sold them, and had $1 million profit rather quickly. Built them to spec. It was great idea. Something that was interesting. People find ways to make money in real estate that I'm always astounded by. Every time you thought you knew and understood everything, somebody comes up with a better idea. Some make sense, some don't make sense.
There's a question here on from Doug. I think he's not here anymore, but
Don?
Don, yeah, do you want to say that? Do you want to?
Sure. It was my son just bought a house, and it's a 4-bedroom, 3-bath, and he's planning on renting out rooms. It was he's owned one house before, but he hadn't owned it in a while, so. But, if he rents out rooms, he's only there, he drives semis, so he's only there 1 day a week typically. Does that affect the policy at all, and how would it affect it? What, does he need to do anything different?
So typically, for instance, Nationwide, who's a moratorium, used to write a policy where I could write a home, an individual home, and it might have up to 3 units that can be rented out in the home. So it's written as a homeowner's package, and then we schedule, other apartments. We have liability written into there for the 3 apartments, and that's the way to do it. So yeah, and there are other companies that'll do that. Up to, again, it's limited number of units. What the one thing I forgot to address, it's the kind of popular, is Airbnb. We're getting a lot of people that are want to do the Airbnb type of thing. Oh, I'm going to rent it. I'm doing Airbnb. So it's called, you need a short-term rental endorsement on your policy. There's only a few carriers that do that. If you're going to be doing the Airbnb thing, they don't specifically love daily rentals. They want, they prefer a week or more. But like in your son's case, is that I'm assuming, even though he's a semi-driver, hopefully these, would they be short-term rentals, or would they be a little bit longer rentals?
No, he's looking at long-term, just renting it out by the room. He'll probably get 2 or 3 students. He's pretty close to one of the universities, and just rent out rooms. It's got plenty of bathrooms, and it's really good setup for that. So
Probably, like I said, written as a homeowner. I wouldn't, you don't want to be listed as student housing, but
Yeah.
Just renting to people
Yeah.
is what you want to do there. But yeah, you just have to write it as a homeowner, and make sure you schedule out the other, units for additional units for, liability.
Should the people that are renting out the rooms, should they have renter's insurance and list his son as a someone on the policy as well?
I'd strongly suggest it. Sure.
Yeah.
I'll give you an example. You hear the Airbnb stories. The son is out driving the semi. He's gone for a bit, and they throw a party in the house. They throw a rave, and all of a sudden, 200 people are now in the house while your son's out. Okay. And there's major damage done to the house and stuff like that. So certainly be nice if something was like that, to have that renter's insurance policy. It's already in your hands, and you're calling up that carrier to file a claim. You already have the insurance certificate in your hand. You know the name of the company. We can just Google the claims phone number and call in the claim.
Yeah. Thanks.
That's been a whole thing. People, renting out these really expensive houses, and people buying, renting the houses and throwing these rave parties, and damaging the houses.
Can you talk a little bit about what's going on in some of these states like Florida and California, where insurance is getting almost impossible for homeowners and other people? It's so expensive. Like, kind of, what are some options? What do you think about some of these state programs that are going in?
Well, when I say it is what it is, we had discussed this, and if you're buying certain areas, like I said, in Florida, and you're buying on the water, and you're buying on the coast. So when I spoke to my realtor friend on Sanibel Island, this was an interesting discussion. I said, how is it down there? Mortgages and people have to wait. Is it hard to get mortgages on the island? She laughed, and she looked at me and said, I haven't sold a property yet with a mortgage on it. Everyone pays cash. So, like I said, some just self-insure. Some have insurance, some don't. But if you're in areas that you're just not going to be able to get insurance. If you're in a high fire area, Colorado, Montana, parts of California, the condominium associations are losing their insurance, and there's just no way to get insurance. They can't get insurance. It's just in too high of a fire hazard area. And the state's having to jump in and try to figure out what they can do to help. Or like in Florida, they set up their own insurance company down there to help. And as they build up, they get hundreds of thousands of clients. They say to carrier X, we're going to cede over 20,000 policies to you. You don't really have a choice. We're giving them to you. You need to take them because as a state, we need to reduce our risk. And company Y, we're giving you 20,000 policies. And that's the way it occurs. They cede off some of the risk. But you need to be mindful, sometimes where you're buying, what are you buying, how do you get it insured? So those are discussions we need to have.
So are these state policies, are these state companies only insuring in these really high risk areas? Or are they insuring across the state if somebody were to look at that?
The answer is specifically, they actually insure across the state because there's carriers, for instance, that will write you a nice policy in Florida, X wind, no wind. So you have to go to the state fund just to purchase your wind. So that's
so it's sort of like the flood, which is 90% federal kind of stuff.
Correct. But, we're doing more with like a carrier, like we just signed up with Neptune, who will write policies that are, one policy. It's not just the base flood of 250,000, but they'll write much higher policies. So, we all saw the stories in California, outside of LA, that whole mountainside burning down, $1 million houses just gone. Carriers like State Farm really took it on the chin. If you Google State Farm, you'll see that their California company, which is its own separate company, I believe, may have taken a rating downgrade recently. But it's its own separate company. Some carriers in Florida, they write in Florida, but they have Florida its own separate thing. It has to stand on its own separate laurels. It's not fair here in Maryland to subsidize people down in Florida so they can get cheaper insurance. If you're buying down in Florida, you need to stand on your own laurels, kind of thing. So why should I have to pay higher insurance up here in Maryland to support you in California and Florida? So the carriers set up their own individual companies in those individual states to account for that. Who else?
Did I hear you correctly that if you live in Florida and you're willing to accept a policy and X out the wind or flood, you can actually get insured? You just won't have, obviously it's not worth that much, but something else happens, you're at least insured, a fire or something like that.
There are carriers who will write it X wind, no wind.
Okay.
Like, this is great. Well, but the mortgage company wants wind.
Okay.
So you're going to have to get both. If you get a mortgage, look, if you wrote a check, you own your house, it's up to you whether you want the insurance or not.
Yeah.
That's on you. I had a friend the other day send over a policy from Arizona. We quoted a Travelers policy, and then he got a quote from Travelers from the get-go, I'll say. And there were vastly different in price. When we looked at it as an insurance agent and said, hey, this is missing a lot of stuff here. That was really written as a basic stripped down policy. This is an actual policy. It's $1 million home. He only wrote you 700,000 of insurance. We wrote you, $1 million with a 50% kicker above it for $1.5 million. We gave it the service line coverage we discussed. We gave it water and sewer backup. We gave it, all kinds of stuff that you needed, higher limits. So you get what you pay for, kind of thing. Same it was funny. It was the same carrier. What else do we have? Guys, ask away. Any questions? A great question. Love to answer them.
There's, we always have issues with people sneaking in dogs and everything. I know you spoke about dogs, but what about the breeds that are considered dangerous breeds? How does that work with the policies?
Some carriers have it written in, some use the word aggressive breeds, others will actually say the word Doberman, German Shepherd, and Pit Bulls. I've seen Akitas in there. There's another
About
breed.
Cane Corsos.
I have not seen that breed in there.
I don't know. They got the biggest bite.
But there are carriers in there. They want to know some ask about how big's the dog, what's the breed. It could be an issue with them. And if that's an issue, we get, is there a dog bite history? We'll run what's called a clue report. If the person's going to rent insurance from you, when we do it, we run a clue report. We can find if they've had prior claims.
Oh.
A dog bite with is going to show up on an insurance policy. So we have a gentleman right now who doesn't want to get rid of his dog. It's had 2 dog bites. We've had to get him special insurance. It excluded the dog bite, and then I got him separate dog bite insurance. But that's what he's had to go through to get insurance.
Wow, so the dog bite insurance will cover any breed.
Well, we have to schedule the breed and the
Gotcha.
bite history and stuff like that. Sure.
Wow. So we've had issues where we've rented a house out to somebody and we go there and of course they sneak a dog in and it's like one of those aggressive breeds. So, we'll tell them they have to
Go back to
get
the
rid of the dog.
lease. What's your lease say?
Right. Yeah, exactly. And then
Are
we're
they
like,
in
well, if something
violation of the
happens.
lease?
Mhm.
So another claim that's come up recently, everybody. Emotional support dogs, the new thing. And if a person, depending on how you addressed it in your lease, you're going to have a hard time trying to evict someone that has a emotional support dog. So sure enough, they tried to evict the person and the person filed suit, hired an attorney, and now it's a mess. But you're probably not, going to be able to evict in that scenario.
But then the homeowner's not going to be responsible if that dog goes after somebody or bites somebody.
Depends on the lease. Depends on how it's
Well,
written.
if the lease is written up the right way.
Did you require them to get homeowners insurance and make you additional? Yeah, there's things you can do. Hey, I need a higher security deposit. It's right there in the lease that you need to up your security deposit, emotional support dog or not. It just says dog. There's things in there. But certainly things to think about, to address. Nobody ever tells you.
Exactly. That's what, we worry about people sue anybody for anything, and we just got word that, in Florida, they are, doing away with the squatters' rights or giving them less rights where.
Yeah, actually DeSantis signed a bill, so if you have a
Yes.
squatter, you just call the police and they just, you're going. So it's I think that's effective immediately.
So that's a plus.
You had a lot of New York attorneys that have moved and retired to Florida. Remember, I told you in New York, they're representing squatters. They're representing them and become an industry, and they have rights. And here are those rights. You vacated your property over 30 days. We moved in. Possession is what, 9/10 of the law? Tell me I'm wrong. How dare you try to change the locks? So then they go down to Florida and feel that they could do it down there. And DeSantis said,
We're not doing that.
we're not doing that here.
There's a good video on YouTube about a guy how he got rid of his squatters. It was a little different because they didn't have a lease. It wasn't like they got it through somebody that was taking advantage of them on Craigslist. They had just moved furniture in after he told them not to, and they went ahead and did it anyway. And he was trying to sell the house. So he ended up watching them, waiting for them to leave. He went in the house. He got a lease from his mom. It was his mom's house. He was trying to sell it. He got a lease from her, the signed lease from her that he was leasing it. He went in while they were gone, changed the locks, put up video cameras, and said, you need to get the furniture out now. The sheriff wasn't going to help him before that. They said, you got to take it to court. But now he's the actual tenant, and they're breaking into his house when he got there with all their stuff in there. It was pretty cool.
Yeah.
That is smart.
Yeah.
So to take it a different way, here's another lawsuit or have a client in where your tenant wasn't paying you. It's absolutely not paying you. Your tenant's ghosted you. You showed up, tenant's gone, house is abandoned. What do you do with the stuff that's in there?
Yeah, I don't know legally.
You
Storage
generally have to,
locker.
you have to
Yep.
store it. You have to store it for a while.
For
And
how
pay
long?
storage fees.
It depends on the jurisdiction, but anywhere from 3 months to 3 years.
That's correct. So in this case, I believe it was Baltimore City. And
So it's
Shocker.
10 years. It's 10 years in Baltimore City.
Shocker. Shocker.
whatever
have
it
anything to
was,
do-
and 6 months to a year later or 2 years later, people, where's my stuff? What stuff? I left stuff in that house. You're responsible to, store my stuff. And trying to file a lawsuit saying he had hundreds of thousands of dollars worth of stuff that they left in there.
Mm.
But there it is, person left stuff.
Well, isn't it just a matter of their word against yours? You could say, you abandoned the house. When I walked in here, there was nothing in here. It was empty, wall to wall. Is that a defense, or is that too bad you're going to court anyway?
I'm
You're
just
still
telling
in
you,
lawsuit. That's the bad part. You could be in a lawsuit.
Yeah.
my
Steve,
client is in a lawsuit. The guy just disappeared. They showed up. He was gone. Door was open.
Mm.
Wow.
I don't know. Somebody stole your stuff. I don't know what happened.
Exactly. Yep. Right. Steve, have you heard of deposit insurance?
That's what I was talking about a little bit with guaranteed rent insurance. I don't want to call it guaranteed rent, but it's guaranteeing that it gets paid kind of insurance. And then there's there was a product out on this deposit insurance. We used to sell it. I was at the meetings offering it. Nobody would take it. So the carrier did away with the insurance.
Really? I literally just saw it a couple months ago on someone's T12. And I was like, what is this $19 that everyone has? And why doesn't anybody have a deposit? Oh, so the way we do it is we buy a policy. The tenant pays $19, I guess, a month to us. The carrier charges $10 a month. And if they leave without notice or whatever it is, they'll pay up to 2.5 times the rent. So the person is basically, they're paying $1,000 a month and they walk and they don't pay. This insurance policy will pay up to $2,500 to get it re-rented or for damages.
I couldn't get
and stuff
anybody
like
to
that.
take it.
Really?
Not get anybody.
I've
to
never
take the
seen it
policy.
before. This was the first time I've ever seen it, so I was just kind of surprised.
And you got to be careful with that. If you're charging somebody for what I call an insurance premium and you're marking it up, now you're in the insurance business. And you could be construed as being, selling insurance as an unlicensed agent.
Right.
It's just a lawsuit. So there's a national company that does advertises, and if you own a rental property, you probably get a letter in the mail from them wanting to manage and rent your properties for you. And that, for instance, they're down in Ocean City, they manage whole buildings, and they go ahead and get you special insurance like we're talking about now, rent insurance like that, kinds of stuff. For tenant, it's a basic kind of policy, but it's not really an insurance policy. So people are getting rid of their insurance and saying, well, I'm covered every time I have, through my management company, every time it rents, it has these coverages. I'm like, but that's not replacing your insurance when somebody's not there. And there's your condominium when winter comes through, you have no insurance. It doesn't cover you when nobody's there. But they're charging, a percentage of the rent for this policy. That, by the way, I've already written you the correct policy. You already had that coverage. And they make it really hard for you to waive it. So I sent it to the Maryland Insurance Commissioner. I said, look, you want to deal with this now or later, but are they licensed? And it turned out that they wound up having, they ran it through an insurance agency kind of thing. Kind of gives people the impression that they could get rid of their current policy and that they were covered for insurance when it's not actually the case. Only there's certain coverages when people are renting from you. It's really tricky.
Very cool.
Hey, Steve, I have kind of a complex question, but so just you can just kind of guide over it. How do you navigate subject twos and agreement for deed? How do you navigate the insurance? Who gets it? And how do you do that?
Type of insurance.
Yeah, what type of insurance?
We hate
As
that.
we
I hate
Okay.
those calls. I mean, they're a mess when they come in. Can't stand them because you've never taken title to the property. You act like you own it, but the title hasn't been transferred. It's still in the
Right.
original owner's name.
Yeah.
So it's a really gray area. So here's the question. This has come up several times. Great question, Jane. Number one, the original owner of the property may want to still keep their insurance policy on the property in their name. Because if there's a claim or something happens, their insurance company and they have insurable interest because they still in their name
Mm-hmm.
will fix, quote unquote, the damage, based on that owner. And maybe you have to have an agreement of something with that owner. The question is, if you, as the subject to owner, come and try to get an insurance policy from me on a property you don't necessarily legally own. You don't have title to it. And the question is to what extent you have an insurable interest in it. I've called my carriers. We've gone over that. In rare occasion, we've been able to get the subject to purchaser listed as an additional insured on, the policy. But say something happens, and there's a claim, if it's done right, maybe we could get the subject to purchaser listed as what's called a lost payee.
Mm-hmm.
So the claim comes and that the check goes to them, but sometimes it could be a dual party check to both you and the current owner. And if you're not on speaking terms, then the other owner says, well, I'm not going to sign it. It's a mess.
Mm-hmm.
If there's a mortgage, especially, it's a bigger mess. So look, I know people who have done really well with these subject twos, but from an insurance perspective, it's just a mess. We can try to make it as best as possible, but I wouldn't advise the current owner to get rid of their policy. Because title technically, am I wrong? Title hasn't transferred.
Exactly.
Correct.
Exactly.
In real subject two, the deed is changed, but not the mortgage. And so that's the difference between kind of a contract for deed or some of these others. But true subject to, the deed is actually signed over to the person who's buying it, but the mortgage stays in the name, and that still makes an issue with insurance.
Mm-hmm. Yeah.
So what we've tended to do, because we have a number of those deals that I know you don't like, is that we have the homeowner keep the insurance, the person who's either still has the deed or whatever, and we are listed as an additional insured as managing the property. So, and then we just pay it out of the mortgage. So we pay the taxes and the insurance when we pay the mortgage payment. And so we just kind of keep it all tight that way.
As best you can. I mean, there's not a perfect answer because it's an imperfect question.
but it's a great strategy when you're trying to get into a property and when somebody needs to sell to get out. Or if I have to come in with $15,000 or $20,000 to catch up the back mortgage, I'm certainly going to get the deed to that property. So I'm not going to leave myself hanging out that other way.
Well,
Insurance be damned.
Or at least an option.
that's it.
Great question. That doesn't, it doesn't come up often, but we, once every few months we get that call.
Yeah.
And then just one other follow-up. So I'm the investor and I sell a house on a land contract agreement for deed. And then the person is making the mortgage payments to me. How does that insurance work? Because we've seen people do it all different kind of ways. So from your perspective.
And sometimes they can only get insured as saying that they're a tenant. So it's like landlord insurance, like a tenant, when they're actually.
It's somewhat similar. So the deeded owner is still the original owner on that one as well.
Yeah, the investor would be the deeded owner. Yeah.
The investor's the deeded owner.
Yeah, they keep the deed until they actually pay the house off, and then the person in there would get the deed once it's paid off.
Once it's paid off, yeah.
Once it's
Agreement for
paid
deed.
off.
So think car insurance. Think about car and how that works. Is it the title to the car remains with the person who's financing it until it's paid off, but the registered owner gets the insurance.
So we also typically get, that's a whole nother, everything with Toro, where you own the car and then you're leasing it to somebody and they haven't paid it off. Similar thing there. And the bane of my existence is Uber drivers.
Yeah.
And as much as I love them, it's the question of if there's, that whole mess, if there's an accident, who pays for it, and what happens. And I have an old gentleman that makes, as retired, makes a living doing Uber. And after 3-4 accidents, he's at the state fund, his family, can't you help me? I said, he's got 4 at-fault accidents. He got canceled by, the big carriers. They don't want any part of him. This is all we can get him. He keeps hitting people. What do you want us to do?
So I guess the best situation for people to do, I guess that's what I was getting at, is just to call you with their particular situation and how can folks, and we're on YouTube too, so a lot of people will go back and watch this. How do they get a hold of you? And
easiest way, by the way, we're easy to find on the internet. www.luray.insurance.com. Always call my office. I've got 6 people here. We answer the phones. And we get stuff quoted 410-602-2636. You can always email me individually, steve@Luray Insurance, spelled out, LurayInsurance.com. Or a lot of people just, again, easy to get me. There's if you go on our website, there's a tab there to get a quote or email us, information. And, every morning I'll come in, hey, Steve, I need a builder's risk on this street. Here's my name, here's my phone number, and we'll call you first thing and email it, get all the information we need. And, in a few hours, get it quoted up and you're ready to rock and roll.
Sounds great. All right, we appreciate you being here. I know insurance is certainly a hot topic in Florida and across every place else. I mean, here it is. It really is. A lot of investors are bailing out. They can't afford the insurance. So if you can provide something that's a little bit cheaper, they might be able to keep their house or find a different way to go. But we certainly appreciate you being here.
Ladies, it's been my pleasure. Nicole, James, Doug, everybody else who's on here. Been my sincere pleasure. God, 2 hours went like.
It did go fast.
We
It
could
was
probably
very
do this
fast.
all night, right?
Right.
Yeah, we could talk insurance all night.
Okay, people laugh at it, but everybody's got a story. Every story is
Yeah.
different. The claims, I can't even make this stuff up half the time. Come in here.
Yeah.
We see it all. So, better to talk about it now. Steve, what can
Can
I
have it done, right? Yep.
Exactly.
Yeah.
Yes.
Good stuff.
So hopefully I've saved some people some aggravation tonight. We'll see.
Yep.
Sure you have.
I'm sure you'll be getting lots of phone calls.
And we took lots of notes.
Phone calls, emails, please ask the question. Don't feel it's a dumb question. Please, I'm happy to answer the question. That's, if your agent doesn't know, maybe I do.
Outstanding. Steve, thank you so much. Did an awesome
Thank
job.
you, Steve.
We learned a lot.
Thank
Bye.
you for inviting me. Always enjoyable. Much
I'll put all
appreciated.
your stuff in the chat and we'll make sure we send it out on the wrap-up call as well.
Fantastic. Thanks, guys. I really appreciate it.
All
Doug,
right.
good.
Bye.
Good seeing you, Doug. Thanks for being here. Thanks for being here, Emma. Appreciate it.
Thank you, everyone.
We'll see you
Bye.
next week.